thank you everyone for joining today. What we're going to talk about today is something that's sort of becoming increasingly important in the mortgage process. And that's basically bringing up the protection conversation in your mortgage process. Obviously, we do understand that buying a home is one of the biggest financial commitments that most people will ever make. But the sad reality is many clients still don't fully consider what would happen if life takes an unexpected turn. So, what we'll concentrate on today is basically just help you advisors to not just help them secure the home, but their financial future as well. So, in terms of what we will be discussing today, we'll explore how people are currently accessing protection, how you can confidently have that conversation during the mortgage process, and how Scottish Widows can actually support your clients beyond the financial safety net. My aim is that by the end of this presentation, you'll have practical insights and tools to make protection sort of a natural part of your mortgage discussions so that you can really help your clients feel reassured and protect them for the longer term. Now, usually when I'm delivering a big webinar where there's over 100 people who've joined it, we have participants muted and I wait till the last sort of 10 minutes for taking any questions and answers. But seeing that we've got a limited number of audience anyway, if you've got any questions, no need to park it. You can raise your hand and I can obviously address that, or just put it in the chat and I can come to that towards the end of the presentation as well. So we can do that. Right. So let's first of all see how people are actually accessing protection. Let's take a closer look at how customers are currently buying protection and what this actually means for the advisor sort of population. So over the last decade, we've seen a significant shift in distribution channels. So protection call centers have emerged, and they're basically leveraging technology to process business efficiently and at scale. Now, these models are designed for speed and volume, but the problem is they often lack the depth of advice that the clients need. I did a little exercise with my friend 2-3 months ago. And she wanted to get income protection for herself. So I was with her and she rang through to one of these call centers who work on a non-advised basis. And straight away, the advisor, without doing a proper fact find, just reverted to, okay, this is the cheapest 2-year one. Please go for this, the 2-year income protection solution. And I was like, okay, she didn't really ask for the cheapest one. So I obviously butted in and said, no, it's the full term one that we're actually looking for. And then they said, yeah, that's fine, but that's more expensive. So it wasn't an advice sale because it should be more of a conversation because my friend doesn't know much about finances. So, it's really important to get that advised level of service. So obviously, although these call centers are processing business at volume and at speed, but they do lack the depth of advice that the clients need. Mortgage brokers are starting to wake up to the opportunity, but this is happening in a regionalized way as well. So, for example, Southeast remains more resistant to linking protection with mortgage sales compared to other areas. I don't know why that is, but it's for some bizarre reason. Meanwhile, traditional channels such as financial advisors and banks, they've actually seen a steady decline in protection sales over the past 10 years. Now, this trend means that customers are finding it increasingly difficult to access advice or guidance on their protection needs. So, what does this tell us? Basically, there's a growing advice gap in the market. And as advisors, there is a real opportunity to really step in and make sure the clients understand the importance of protection alongside their mortgage. Now, this isn't just about selling a product, it's about helping clients secure their financial future. And again, this slide shows how protection sales have been distributed across different intermediary channels over the recent years. Mortgage brokers account for around 34% of protection cases. Wealth advisors represent only a mere 13%, whereas, again, as I said, the protection specialists, which is the non-advised market, dominate with over 50% of the cases. And it's also worth noting that 33% of term assurance sales are actually non-advised, which highlights a big advice gap in the market. Now, looking at the trend data, mortgage-related protection sales, have grown a little bit since 2016, but wealth advisor sales have declined. Protection specialists have seen a strong growth, but recently dipped a little bit in the last couple of years, probably because insurers obviously, we don't necessarily want loads of business. We want good quality of business. So, they may be getting a bit of pushback on that. But what does this mean for us? It really reinforces the opportunity for mortgage advisors to really integrate protection in their conversations. And not just mortgage advisors, generally, wealth advisors as well. Really important if as a wealth advisor, you're also dealing with the mortgage side of the business for your clients or general cash flow planning, then it's really important to integrate protection in those conversations. Clients obviously trust you during the advice process, so this is a perfect time to address their protection needs as well. Now, this slide is all about why protection matters. Now, let's look at the claim data first, on the top line. So every working day, Scottish Widows pays out nearly 935,000 in claims. Now, that's just not mere numbers. It's actually helping families keep their homes and, put their lives back on track when unexpected things happen. In 2024, Scottish Widows paid out 236 million across around 11,500 claims. And it's not just us, it's basically generally the industry really wants to pay claims. There's a common misconception again around clients thinking, oh, the insurers are not going to pay. That's not true. The insurance industry definitely wants to pay, because if you look at the industry data, across the industry, claims paid in 2023 totaled 7.34 billion. And this really shows the scale of financial support provided when the unexpected actually happens. Now, let's look at the age breakdown. So for life cover, 19% of the claims were for people aged 31 to 50. For critical illness, 40% of the claims were for adults under age 50. Now, this is important because these are the ages when most people are actually buying homes and raising families. Now, the message here is simple. Protection isn't just for later in life, it's for right now. And these figures highlight the, financial, emotional, and social value that protection industry actually delivers. And while we should be proud of these numbers, we do know that there's still a lot more that we can do to close the advice gap. It's not even near closing the advice gap. So it's really important to make sure clients are protected. Any questions so far? Yeah, that's fine. If there are any questions, obviously, as I said, just raise your hand or put it in the chat. Happy to take them. So this slide over here really reinforces why protection is so important during the mortgage process. So the average age of a first-time buyer in the UK is 33 years old. Now, compare that to the claims data for critical illness. 40% of the claims are for adults under the age of 50. Now, that actually means a significant proportion of people who are buying homes and starting families are also the ones most likely to need this cover. So when you get objections like, oh, protection something later of life, I'll do it later. These figures actually tell a very different story, because illness and unexpected events can happen at any age, and the financial impact can be devastating without the right protection in place. This is why it's really, really crucial to make protection a part of the mortgage conversation and not as an add-on, because it is essentially an essential, a very important part of securing their home and lifestyle. Now, when clients take out the mortgage, their focus is just on getting the keys. Some advisors mistakenly think that, oh, the client actually wants the mortgage, but it's actually not that. It's because they are desperate to get that house. They want the keys to their home. So their focus at the time of actually getting the mortgage is not on what happens if they can't pay. But the truth is that the mortgage would not stop if life does. So generally speaking, they want answers to three key questions. First is, can I get a mortgage? How much can I borrow? And how much will it actually cost every month? Now, these are the things that actually dominate their thinking. But here's the point, the monthly mortgage payment shouldn't just be about the lender's repayment. It should also include the cost of protecting that payment, because if something unexpected does happen, the mortgage will still need to be repaid. So, our role is to really help clients see that protection isn't an add-on, it isn't an extra. It's actually a part of the true cost of owning home and securing their lifestyle. And it's really important to actually position protection that way. I have been a mortgage and protection advisor myself. Before I joined Scottish Widows, I'd been a mortgage and protection advisor for nearly 7 years. And it is so important to actually position protection right from the beginning, because if you as advisors don't place significance to protection and don't treat it as an add-on, your clients will see it as being less important as well. So the very first phone call when you've got the client, when they're actually just probably even looking for an agreement in principle, position that you will be doing holistic advice for them, and you'll be looking at what happens if things don't go the way they want it to go. So if they were diagnosed with a serious illness, or they had an injury, for example, position that right at front, at the start, so that it doesn't come as a surprise to them. They don't. If you don't see it as an add-on, they won't see it as an add-on. And people don't just buy protection because you just simply tell them to. It's really important to make sure that they understand, because they buy it when they actually understand what's at stake. Because unforeseen events can happen and the financial impact can be life-changing. So, most people tend to take action when they realize these two things, that, illness, accidents, job loss, and even death can occur at any time. And the impact of the loss without protection and the financial consequences can be devastating for their home and family. So our role really is to make these points clear during the mortgage process, the mortgage conversation. It's not about sort of instilling fear in people. It's about reassurance and really helping clients see that protection is a part of responsible ownership. And when the client actually understands the risks and consequences, they are far more likely to buy the cover that they need. And what I would say is that, it's really important to have better mortgage conversations. A mortgage conversation isn't just about borrowing. It's about building security. The best advisors that I speak to don't just help clients buy a home, they help them keep it too. So firstly, it's really important to, get better volume. So as I said earlier, introduce protection conversation as early as possible in the mortgage process. When the clients know there's a repayment method in place in the event of death or a critical illness, they'll have more confidence. Lenders will have more confidence. They'll feel reassured. And then moving on to better value, think about tailoring protection to the mortgage. So for example, if it's a decreasing, if it's a repayment mortgage, go on with a decreasing term policy, but don't just stop there. Perhaps create a menu plan, that actually provides comprehensive support so that clients can have cover for more than just the mortgage on its own. So obviously income protection also comes there. And finally, better engagement. Protection isn't a one-time conversation. Use annual reviews to check if the loan still meets the client's needs. Find out if their life has changed since they took out the mortgage. Have they had a new job? have they had any family changes? Are there any other events that could mean that protection needs need to be reviewed again? And 9 times out of the 10, things would have changed in people's lives. So it should be more like an annual check that you do with them. And by focusing on these three areas, volume, value, and engagement, you can really turn a transactional mortgage conversation into a long-term relationship that truly protects your clients. Um, a mortgage is just a debt, and that's really important to position it. Okay, yeah, that's fine. I know you're getting a mortgage. It's just a means to get the home that you really want. The fact is that the home that they want to buy is their main aim. Home is their security. Home is their family and everything that the clients actually worked for. If the income stops, the loan sadly doesn't just disappear, but the home could. So we need to obviously talk about it as an integral part of responsible home ownership. That's why our conversation needs to go beyond just numbers. So start by asking open questions. Tell me about your home. Why is it important to you? So it's really important to actually find out what is the main purpose of the client actually wanting to buy this specific home. There could be lots of important reasons. People, it's a very expensive decision. People don't just decide one day that, oh, you know what, I just want to move home. There's often very important reasons behind that. It might be that their families increase, they need more space. They need to be closer to family. There could be lots of reasons, and it's really important to understand that, because often clients would then say, oh, if worst was to happen, I'd sell and downsize. Is it really that easy to do that? If it was that easy to downsize, why are you actually even going through the pain of actually moving in the first place? Because they are moving because it's really important for them and their family. And it would be really important for them and their family to keep hold of that home as well. Also, find out what impact would a loss in income due to death or illness would have on their ability to pay their mortgage. And I think that's really, really important. And one thing that, over the course of years that I've been a mortgage and protection advisor, and I've been guilty of it as well. I'm not perfect, But what I would say is that as mortgage and protection advisors, sometimes, we don't realize that silence is golden. So we often ask an open question, and then we don't like the silence, and then we try and fill in those gaps ourselves. Oh, okay, what would happen if you had a serious illness? What impact would that have on the ability to pay the mortgage? And if the client's still thinking, you just kind of say, oh yeah, you're not going to be able to pay your mortgage because your income will drop. That doesn't hold that much value as compared to if you've given the client the chance to actually think about it and answer it in their own words, because that would actually hold a lot more value. Because when you then recap that to them, saying that, okay, you said that you'd really struggle because your income, you'd only get sick pay for 3 months, and then after 3 months your income would go to half pay, and then after that it will reduce to zero, and you said it would be really, really difficult. You said you'll have to give up and cut down on a lot of essentials. And then it all makes more sense because it's actually something that they have said rather than you have told them. So again, analyze what impact that would have. And don't just stop there. I would also say that, ask them about existing cover that they have at the moment as well. Don't just discard it. And if they have it, appreciate it. That, yeah, that's really good that, you have got cover. Great. What I used to do and used to really work well for me is that at the point of the application, I'd say ask the clients to send their payslips, but at the same time ask them to send in details of any existing cover. Because as part of my mortgage review, I'd be looking at reviewing their cover as well, because obviously, great, if you've got cover, Mr. Customer, great. If it is enough, brilliant, you'll have peace of mind that I've checked that. But if it isn't, and there is a gap in your protection needs, I'll be giving my recommendation. So obviously, be confident because you are their financial doctor. So these questions really help the clients think about what really matters. It would then help them think about that it's about their family and lifestyle and not just the loan. And if they say they can't afford life insurance, challenge their thinking. Can they really afford to lose their home? And finally, reassure them. Would you like me? I don't like this would you like me question, to be honest. You should be more assertive in your approach and say, okay, well, you told me that if you were to be diagnosed with a serious illness, your income would drop to this for the first 3 months, and after that it'll go down, and then you'll have to cut back on your children's activities, this, that, and the other. So what I will do is basically I will make sure that I discuss the options that can actually help put your mind at ease. This will actually position you as a trusted advisor who really cares about their peace of mind, and it's not just about the transaction. Most clients think their monthly mortgage payment is just what they owe the lender, but that's only part of the picture. The true monthly cost of owning a home includes more than just a repayment. As I said earlier, it should also account for their protection needs, their life cover, their critical illness cover, their income protection, and their buildings and contents insurance. Why? Because if something unexpected actually does happen, the mortgage will still need to be repaid, and the home will still need to be protected. So by framing the conversation this way, you'll help the client see protection as part of the overall cost of home ownership, and it's not just going to be an optional extra. Now, let's take an example over here. A mortgage, £250,000 mortgage over 30 years at 4.37% fixed rate. So the lender repayment might be around 1,248 per month. But when you actually add protection, so that would be their life cover, critical illness cover, income protection, and their buildings and contents insurance, the total monthly cost comes to 1,507. Now, this is important because it reframes protection as part of the true cost of home ownership. It's not an optional extra. And by showing clients this breakdown, you can really help them understand that protecting their mortgage and lifestyle is just as essential as paying the lender. Now, I'm just going to share some mortgage conversation hints and tips on this slide. So when you're having mortgage conversations, think beyond the numbers. Assess your client's ability to sustain expenses during illnesses or death. Highlight critical illness cover as a way to replace income and protect their lifestyle. Discuss the impact on children and offer free children's cover. It's a very powerful reassurance. I'll share a personal example over here. People don't even want to think about ever sort of their children getting diagnosed with a serious illness. So it's really important to discuss the impact on children as well, and offer free children's cover when you're discussing that. Because before I had my child, I basically got critical illness cover through Scottish Widows for myself. Okay. And when I got it, I didn't even think once that I would actually need to ever claim on children's critical illness cover. I didn't even have my son at that point in time. Sadly, in 2023, my son was only 15 years old then, and he suddenly appeared with a lump on his neck. And it was actually lymphoma, and it was stage 4 lymphoma. Thankfully, my son's fine with the medical advancements. He had to go through grueling chemotherapy for a very long period, and he is in remission. But the fact that I had that critical illness policy and it actually covered, for children's critical illness as standard was really useful, because there were millions of things actually going through my mind at that point in time when my son was diagnosed. And one of the things was, okay, well, this is a really long period of time that we'd have to go through therapy. How would I manage, if I have to take prolonged period of time off for work to be there with my son? And my son also is severely autistic. So, it was a no-brainer, even though he was a 15-year-old, he was technically only probably a 2-year-old mentally age. So, I really needed to be there. So it was like tens and millions of things. And then that just gave me peace of mind that, okay, wow, okay, I will get a little bit of cash behind me through the Children's Critical Illness cover. So if I do need to take time off, at least financial security is there. And yeah, that doesn't take away the pain. There is a lot of emotional anxiety, but that just helps. So it's really important to talk about that as well and explore. As I said, don't just ignore any existing insurance that they have. Review that, check if there's any existing insurance coverage and why they actually took out that cover. That's a very good question to ask. Okay, great. You've got this life cover. Why did you actually take out? You've got this critical illness cover. Why did you take that out? Because that'll actually make your job a lot more easier because they'll give you an answer that they're worried and that's why they did it. Um, and consider policies that are sort of counter inflation as well, like non-decreasing options on increasing basis. Just review their whole protection needs rather than just focusing on the mortgage. And the key is really to make protection relevant and personal by linking it to real life events. Obviously, there could be loads of changes, new home, job changes, family growth, unexpected challenges, bereavement. And these tips all help you turn a transactional conversation into a relationship that's built on trust and security. So now what we'll just talk about is how we at Scottish Widows help with the mortgage process, to help with these conversations as well further. So delays in mortgage completion shouldn't mean delays in peace of mind or unexpected price hikes. So one of the biggest frustrations that I often see advisors having is when a client's premium changes because their mortgage process actually takes longer than expected or they hit a birthday milestone. So that's where a price lock promise comes in. So from the moment you submit the client's application, we guarantee that the price won't change for up to 12 months unless an underwriting loading is applied, even if they pass a quarter, half, a full birthday. So that would mean there's no awkward conversations about increased premiums and there's no need to write suitability reports. And on top of that, our health log guarantee ensures that once terms are issued, we don't need to be informed of any changes to the client's health for the first 90 days. Now that gives you and your client certainty and confidence during what can be a very, very stressful time. Obviously, the message here is simple. We want to remove the worry of price changes and health updates so that you, as mortgage advisors, as the protection advisors, can actually just get on getting that mortgage completed smoothly. A lot of advisors that I speak to, they don't, they find those conversations really, really difficult when, the mortgage isn't completed. You've got to put the cover on risk on completion, and the client had a quarter burst, and you've got to go to your client and explain them, oh, well, the premiums increased by another £1 because you've just had a quarter or a half birthday. The conversation's not very easy. The client might just come back saying that, oh, I don't actually celebrate quarter birthdays. Have any of you ever faced this before? Very quiet, everybody. But yeah, that sort of thing can help. And then let's move on. We do also add free accidental death benefit. So your client's protection starts the moment they apply. It's not just when the policy goes live. Free accidental death cover will give your client peace of mind during the application process. So basically, from the day we receive their fully completed application, they're covered for accidental death for up to 90 days or until the policy terms are offered. We'll pay the full sum assured or £250,000, whichever is lower. This means that even if underwriting actually takes time, your client isn't left exposed, and it's automatically included at no extra cost. So again, no extra paperwork, and it's a great reassurance for clients who worry about being unprotected while they're waiting for the policy to start. And then similarly, there's free mortgage cover as well that we offer. So from the moment your client exchanges contracts, they're legally committed to the mortgage, even if the protection hasn't started yet. And that's the risk that we want to remove. Free mortgage cover is obviously designed to protect your client during that critical period between exchange of contracts and the start date of the mortgage. It's available to clients who apply for life and critical illness or a critical illness policy in connection with a new mortgage. And the cover lasts for up to 90 days from the date that they exchange contracts. Um, will pay out the initial amount applied for up to 1 million for a life cover claim and 500,000 for a critical illness claim. And this means that your client has certainty that their mortgage is protected even before their policy officially starts. It's automatically included and it's at no extra cost with no extra paperwork. Again, a powerful reassurance during one of the most stressful stages of buying a home. And then life changes, and so should your client's protection. And we do have guaranteed insurability options as well that make that possible without extra underwriting. So for life and critical illness cover, if your clients are accepted on standard terms, they will be eligible for GIOs. For income protection, even those who are accepted on non-standard terms, GIOs would be available to them. So obviously, we do understand that clients' lives don't just stand still. They get married, they have children, they change jobs, increase their mortgage, and each of these events can really create a need for more cover. And GIOs actually will allow your clients to increase their sum assured during the policy without further underwriting for such key events. Um, and this flexibility really means that clients can adapt their protection as the circumstances change without the hassle of any medical evidence or new applications. And again, it's a powerful reassurance that the cover can actually grow with them. And then lastly, we will be going through Scottish Widows Care. And basically, the Scottish Widows Care package comes with every single policy, whether it is, every single Scottish Widows Protect policy, whether it's life, critical illness, income protection, personal protection, business protection. And it basically comprises of 3 components, and that includes Red Arc personal nurse support, a clinic in a pocket, which is like a virtual GP, and Macmillan Cancer Support. And all these benefits actually come from day one at no extra cost. There's no need for the clients to be making a claim to be able to access them. They do cover them for the pre-existing medical conditions as well. So if you've got a client who's disclosed that they've got mental health issues, they can still use Red Arc personal support for help with the therapies. So if the Red Arc personal nurse feels that, okay, this person could really benefit from CBT counseling, they can arrange that for them. And it also extends to the client's immediate family, so partner, children, and they get access to a dedicated personal nurse as well who can arrange a valuable second opinion if they were diagnosed with something, and they get access to clinic in a pocket as well. And why do we add this? Because at Scottish Widows we do know that serious illnesses impact more than just a client's finances. It's about their emotional well-being and their families as well. And that's why every single Scottish Widows Protect policy includes our care support at no extra cost. I believe, and I think it's really important, I would say not just Scottish Widows, but generally other insurers also tend to have some sort of added value services. So when you're actually talking to your clients about that, it's really important to talk about these added value services as well, because they really help the clients see the value that they will get throughout the policy's lifetime, and it helps with that stickiness of the policy. So, when the credit crunch happens, or they are in there's a cost of living crisis, they wouldn't naturally just go and hit the delete button on that direct debit for life cover or critical illness cover if they know that they're actually getting all these benefits. How nice is to have a GP service, virtual GP service. Obviously, our Red Arc service is of the highest level. I know some other providers have got Red Arc services as well included as the added value, but it is at a lower level. So obviously, I'll just go through some of the beats over here. So we do partner with Red Arc, which is a specialist support provider that gives clients and their immediate family practical advice and emotional support during difficult times. So whether that is critical illness diagnosis, a serious physical health condition, or mental health challenges, or even bereavement. And this is what Red Arc does basically. It supports with a wide range of circumstances. And on the right hand side, you can see all the services that are available. Uh, and basically, they provide clients and their families with access to highly experienced personal nurses who offer them long term practical advice and emotional support. And the good thing is they understand that every situation is unique. And they approach each scenario with a mindset, what can I actually do to help rather than, oh, this is not covered under your policy added value benefits. They support a wide range of circumstances that, that could include cancer, cardiac conditions, mental health challenges, trauma, recovery after hospital discharge, or just bereavement counseling. Um, and they could even arrange a course of therapy, such as counseling or complementary therapy for that matter of fact as well. Red Arc ensures that the clients aren't just financially protected, they have someone by their side to guide them through their life's toughest moments. And what I'd like to add as an example over here really is that there isn't really a set list for Red Arc. They can be very, very creative in the solutions that they offer. We've seen in Scottish Widows for clients that Red Arc has helped them in various sort of different situations. We've had a Scottish Widows client who used Red Arc bereavement support following the demise of his wife. Red Arc identified during the process that, they were in a very traditional sort of relationship. So his wife did all the cooking and cleaning, and, he didn't really know how to help himself in that manner. So what Red Arc did was they organized and funded for him to go in on an elementary cooking course so that he could actually look after himself better. And it helped with the social aspect of things as well. So they can be very, very creative. There isn't just a set list. And alongside financial protection, Scottish Widows offers access to health support services through Clinic in a Pocket as well. And that is available from day one of the policy. And the service gives clients and their partner and their children unlimited access to UK-based GPs 24/7 via remote consultation. And again, that's at no extra cost without needing to make a claim. They can also get prescriptions delivered to their home. The good thing is, obviously, all of this is priced into the proposition. So, there are unlimited number of GP appointments. I know some providers they do cap the number of GP appointments to around 3 a year. So obviously, but with us, there's no cap on that. So it gives you can even ask your clients, okay, how much would you actually put a price for a GP appointment, a GP service, unlimited GP appointments for you and your family through the comfort of your own home. And they would actually see, especially people who've got children, they'd really value that service. And for a small fee of £15, the GP Clinic in a Pocket can also write a fit note if they need it. And they can even make referrals to private specialists for a small fee of £15. And that's really worth it, because if somebody is actually really struggling to get through to their NHS GP, that really shows the value it can deliver. And the data speaks for itself. Over 40% of appointments happen outside normal hours. And nearly 20% take place at weekends, showing really how valuable the flexibility is for busy families. And the message here is simple. We're not just helping protect finances, we're giving clients practical health support when they need it. And then lastly, cancer isn't just it isn't just something that affects health. It creates a financial shock that can put recovery at risk. Now, the figures over here from Macmillan are sobering. According to Macmillan Cancer Support, 16% of people going through or recovering from cancer treatment have actually had to sell personal possessions or borrow money just to make ends meet. Almost 1 in 3, 31%, are actually struggling to pay basic living costs. And more than a third have been buying or eating less food. And tens of thousands have actually been spending more time in bed to stay warm. All of this could really put their health and recovery at risk. And these numbers show that a cancer diagnosis isn't just a health challenge. It's also an emotional one. It's also a financial one. And this is why additional support services matter so much. Um, Not just, as I said, additional service supports that Scottish Widows does, but, shout out about others as well, what other insurers do. Uh, because clients need more than just a payout. They need help navigating the impact as well on the everyday life. And that is why we are proud to partner with Macmillan Cancer Support, which is one of UK's leading cancer charities. Macmillan understands how a cancer diagnosis can affect everything. It could be from health and emotional well-being to finances and work even. Through this partnership, clients can access free, impartial, and confidential support from Macmillan specialists. And this includes guidance on sort of money worries. They can arrange mortgage payment holidays as well. And they can help them understand benefits and plan for the future. And what we do is basically, because we partner with Macmillan Cancer Support, at claim stage, we go further by offering an advance payment of £3,000 for cancer claimants. And that gives immediate financial relief during the treatment. We also have a very strong cancer in situ requiring surgery definition, which ensures comprehensive cover for early stage diagnosis that still requires significant intervention. When you're sourcing your critical illness products, I'm sure, whatever you're using, Solution Builder, Iris, you might notice that, okay, Scottish Widows doesn't come to be the cheapest. It might be in the top three, but not the cheapest. But when you actually compare it with some of the, because we've just got the one approach, just one product, whereas, other providers generally have like a bronze, silver, gold approach. So when you actually look at the cheaper contracts in the market, you might notice that their cancer coverage is very, low as compared to what Scottish Widows is offering, because we've got a single definition in our additional conditions, which is cancer in situ that requires surgery, and that alone covers 200 types of cancers. Whereas with some of the cheaper contracts that you may see in the market, you might notice that they may have 5 or 6 listed on their additional conditions, and they might specify a particular part of the body that has cancer in situ that requires surgery. So it might be cancer in situ of the breast that requires surgery as one condition, and then cancer in situ of another part of the body that requires surgery as another condition. We've just got the one condition, but that covers over 200 types of cancer. So, it's really, really comprehensive. So it may well be worth, looking at value than just the price, because obviously consumer duty is so much about, what value can you deliver to your client rather than just focusing on the price. So the message is clear. We're not just providing financial protection, we're connecting clients to expert support and delivering practical help when they actually need it most. And we're committed to actually paying your clients' claims. Obviously, we've got a very strong claims history. I can send you a claims report as well with the email that I send you. But the problem is, for majority of insurers, the biggest challenge is when paying claims is instances of misrepresentation. So as advisors, it is really crucial that you help your clients understand the potential consequences of not answering underwriting questions fully and honestly. What I would say is basically, rather than just making it a tick off point for your compliance that, you just quickly read, okay, please make sure that you answer these questions honestly and completely, have a candid conversation with your clients at the beginning saying that, okay, we're doing this. I would not like you to get this wrong and then have your claim declined in the future. So it's really important to listen carefully and answer these questions accurately. And if you're unsure, please raise it so that I can get clarification for you. And that can really help with that. Because it's really important as advisors to make sure that right answers are, and you're not just protecting the insurers with giving the right answers, but actually protecting your clients as well in the future and your own reputation. In 2024, 0.82% of life claims were actually declined due to misrepresentation, which is almost double 2023 figures. And 3.5% of critical illness claims were declined due to misrepresentation. So it's a big challenge across the industry. And I'm sure the advisor population can help with this. So that brings us to the end of the presentation. What we've learned today is we've understood how people are accessing protection. First of all, we talked about the emergence of these call centers, which work on a non-advised basis, and how big the protection gap is. So, and it's a big opportunity for advisors to actually step in and provide the clients with the advised recommendations. We then spoke about how you can have protection conversations during the mortgage process. And then thirdly, we've just briefly touched up on how Scottish Widows can support your clients beyond the financial safety net. If any of you would like to, find out a little bit more about our critical illness proposition overviews, just come to me directly and I'm more than happy to arrange that as well. Because on here, I've just literally focused on things that make the mortgage process easy and I'm not focused on everything. So that is the end to the presentation. Thank you for your time. Any questions at all? Fantastic.
No questions. Thank you very much.
No problem. Well, thank you very much for your time, everybody. And as I said, I'll send Mohan a summary and the slides, and I'll also send the claim stats, the claim report for last year. By all means, have a look. But if you've got any questions, you want to learn more about Scottish Widows, you're more than welcome to contact me directly. I'm quite happy. I'm just away at the other end of the phone.
Thanks, Canwell. Thank you. Thank you for your webinar.
Yeah. Cheers.
No problem.
Thanks.
Well, thank you very much. Thanks.
Thank
Take
you.
care.
Bye-bye.
Thank you
Bye-bye.
very
Bye-bye.
much.
Bye.
Bye.